All right, let's go ahead and get started. Just checking on audio. Can everybody hear me? Just give me a thumbs up if you can. Great, thank you. Today is Monday, April 14th. This is a session is being recorded for everyone else that's not attending live. Got a lot of things to cover today, but first and most pressing is Wednesday. So Wednesday is your next team project presentation day. 24 teams will be making 24 presentations on 24 different companies. You'll be making them, as you have done before, in person in the lab. Basically, the TA will be there grading you in person. I will be virtually following what's going on. Still can't come to class yet. But so long story short, very similar to last time. And I thought it might be helpful to also show you the rubric that they're going to use to grade you. But general structure is each team will have 10 minutes to make their presentation. Again, you're going to be turning in all of your files by 10 a.m. Wednesday, the company that you have selected. That will include the PowerPoint, which includes all the screenshots from Excel and the Bloomberg screenshots. They need to be in that PowerPoint file. If they're not, then you'll lose points. In addition, anything that you want to say about the context should be there. And then you'll also have to submit all 4 of your Excel files in addition to that. So the as is, the bull, the bear, and the target models. You won't be presenting those in class. You'll need to take screenshots from those, put them into the PowerPoint and present them, but you still have to submit the original files. So very, very important. We have to get through 6 teams, 10 minutes per team. So again, not a lot of time given the class schedule. And again, over the course of the 4 presentations, basically, it's important that everyone on your team eventually make a presentation, at least one. So make sure that on the PowerPoint, you list who your presenters are. So we can keep track of that to make sure that everyone presented across the 4 presentations. So that is Wednesday of this week. Friday, by the way, the peer reviews for this 3rd group project are also due. Don't forget to submit those by Friday, end of day, 5 p.m. All right, when you do your PowerPoint, my suggested structure is slide 1. I am doing whatever company. Here is my target share price. Here is my buy, sell, hold recommendation. Some people like to give a quick description. You're welcome to. Remember, you got 10 minutes. And then you're going to want to cover each of the 4 modules. So what I had done, and I'm going to go ahead and share my desktop. I think this actually worked fairly well. Zoom menu out of the way. Is in the files folder here. I just put the grading rubric as a PDF file that the TAs will be using for each one of the sections. But it's basically this file. So the presentation itself is worth 10 points. The as is 2, the bull, the 3, bear 3, target 2. Okay, so that adds up to 10 points. To get the 2 points, basically you need to make sure you turn in, talk about your as is. So to get the 2 points, you got to explain which ratios you put in the as is and why. And you got to use the multiples of EBITDA. Sorry, I said multiples, the margins, the EBITDA margins, correct that, for EBITDA to explain that range of margins that you used as your sanity check for the continuing value. For the bull, you have to not only have the file, but you got to have an explanation of what did you change and why. What is the real world context that caused you to make those changes? Otherwise, you don't get the 3 points. Same thing for the bear. What did you change in the ratios and or assumptions? And what is the real world context for why you changed it, right? And then the target. What did you change? And what is the real world context for why you changed it, right? So that's how you're going to get the 10 points. If you don't do the buy, sell, hold, you lose a point, okay? Other things that could cause you to have some deductions. If you don't upload your Excel files, you lose 4 points to your entire team. If you don't have screenshots, you lose 1 point for missing, or each missing screenshot that's not in that PowerPoint. Okay. If you don't show up for any reason and you don't have a pre-approved, university approved absence that we agree to, you lose 4 points individually for not showing up. If you are sent out of the room for disruptive behavior, you lose, your entire team loses 4 points. And if you have an unbalanced CFI, don't even bother to make your presentation because you're just going to lose a 0, no matter how much work you do. So unbalanced presentations will not be graded. Okay, so that's the rubric that the TAs are going to be given to basically grade you on Wednesday. Questions about anything relative to that? So again, my suggestion, you can use Google Docs or PowerPoint, cover slide, put the buy, sell, hold, and target price on there. Get into your as is. My suggestion is take a screenshot of, and I'll use Delta as an example here. Take a screenshot of these assumptions. Take a screenshot of these kind of key ratios. Hide a few columns here. And then basically, as you go through each one of the 4 models, you have those 2 screenshots for each one of the 4 models in your PowerPoint, and then the prices associated with that. And then use some bullet points, either next to the screenshot or on the next page, why you changed what you changed, including the real world context. Make sure all of that is in your presentation, including the screenshots, which you can either put as an appendix or embed in there, but they got to be in that PowerPoint presentation as well. Because again, if you go to Excel at any point during your presentation, I'm telling the TAs to stop listening to you and give you no credit for that. If it's not in the presentation, it doesn't get graded. And manage your time. You got a lot to cover in 10 minutes. If you run out of time, doesn't matter what's in your presentation, you won't get credit. And remember to use numbers along the way. That's been a rule in this entire class. Don't get general, don't get broad, be specific. So I want to set everybody up for success. I think the criteria hopefully is pretty clear. We've been practicing a lot. We're going to talk about Delta in just a minute. I know many of you have been reaching out to TAs for help with some of your group project teams. At this point, for the valuations, you should have already begun work on that. And as I said before, you can use one of your team members' Excel models on behalf of the team for the presentation. Back to any final questions about that? All right, we'll look forward to hearing about those presentations and about those industries. So the other thing I want to do is just a quick Bloomberg trading challenge check-in. So let's go to TSG. So very quickly, looking through the sections in the second half. So here is the 11 a.m. section as of today. A little bit of a wild roller coaster ride. All right, so I disqualified a team last week. I don't want to disqualify another team this week. So Jay Para, 11 a.m. section. I hope you're watching this video or somebody in the 11 a.m. section. You have until 5 p.m. today to get out of cash. You are in violation again for having too much cash, $362,000. So you have until the end of day trading or you will be disqualified beginning tomorrow morning, which means you'll get a 0 for your entire team and your entire team will take the final exam. This is the last warning that I will give. Can be more clear about these warnings over time. Otherwise, here is the current ranking, assuming they are not disqualified. That is section 101. Big sample. All right. So section 201. Okay, this team is close to the edge, but still under the 300,000. And I'll just state this really clear. This is not a holding cash because I'm afraid to trade competition. This is a trading challenge, which is meant to trade. Technically, you shouldn't have any cash. You should just be in equities. I don't care if the market goes up or down, you trade. You find a way to make money. That's real world, right? So this is a trading competition. This isn't a sit on the sideline and cash competition. So make sure you do not go above that $300,000 threshold. Keep the cash at work, regardless of what happens to the marketplace. And you actually, with the volatility, you should be doing pretty well right now if you know how to play the volatility. 301, which is share section. Again, everybody is under currently the 300,000. They're close to the line, but they're still under. And that's the current ranking in your section. And finally, section 401. We only have 5 teams because 1 team was disqualified last week. So this is the current portfolio value of the 5 remaining teams that are competing. And so the grade distribution will be slightly different in this section going forward. Since 1 team's getting zeros, the grade distribution is 5, 4, 3, 2, 1. And the other sections will be 5, 4, 4, 3, 2, 1 for the 6 teams. Hopefully I don't have 5 teams in the 11M section tomorrow. All right, questions about the trading challenge? I believe you have about 3 more weeks to trade. So we're about halfway through the trading competition. All right, so let's talk about Delta Airlines. So over here on the left is the Delta as is. And I updated this right before the class. So your share price might be different depending on when you did the valuation, because obviously the markets have been fairly volatile. Last week. So even in the last week, share prices, have gone from as high as 44 to as low as 40. So depending on where you were in this range, you might have slightly different numbers. And that's the whole point of the as is. That's why we do the screenshots. Okay? But so my as is valuation is going to be about $40 a share, 40.24 when I was starting this. Okay. So again, you guys are pretty familiar with the process. Update the data for Delta. Go to assumptions. Last reported year is 2024. Make sure you update those. WACC at the time of the valuation for my screenshot was 8.1. I set a G of 2 just as a starting point. Shares outstanding 653. Current share price at the time 40.24. Make sure you update the revenue and EBITDA, and from the EEO screen around the time of the DES, because these multiples are based on the current share price. That was the EV to revenue and EV to EBIT multiple for Delta Airlines, which suggested these perpetuity margins between 9.3 or 9.9 and 10.3. Okay. Then when I went for guidance, they didn't have tax rate guidance. So starting to look around the annual report, the last JP Morgan report didn't, but Barclays did. So I used the Barclays long-term tax rate of 24% for the tax rate. For EBIT margin, 9.9 to 10.3 is basically, that's that number needs to be between 9.9 and 10.3. Okay. Given the pessimism that has been going on in the marketplace, I did mine as is with 9.9 as the range. So somewhere between 9.9 and 10.3 is where you want to do that. You do that by adjusting the EBITDA. Okay. Now, again, we did it the first time. It was the same for the 2 years. Here's what I mentioned by the range. I'm choosing the lower end of the range. And if I were doing my presentation, I would be explaining why I use the low end of the range, even in my as is, which would basically be the market pessimism of the Trump tariffs. So that's where the 14% came from. Basically, I left 3% in there for 2030 as a placeholder. It's not going to matter that much. And got to a share price of 55.85. And again, current's around 40. And this is where I think many of you started to get tripped up, because then you said, okay, I have to solve for a G. So let's go ahead and goal seek this. And I want to set my price to 40.24. And I hope that this has been shared all along the way. Has this been shared? Are you seeing my screen?
Yeah.
Yes.
As I've been doing this.
Yes.
Yeah.
Testing. Hello. There's 40 people on the call. Can somebody tell me, have you
Yes.
been able to
Yeah,
see my
yeah.
screen the whole time?
Yeah, we can see it.
I have that working. Yay, nay. Okay. Check my sound because I'm not hearing anything. All right. So, but by changing the growth, and if I do that and try and solve for that, then I'm going to get negative 11%. So here's the deal. If you were to present this on Wednesday for a grade for that section of your PowerPoint presentation, I would instruct the TAs to give you a 0 for an unreasonable number. Okay. Because let's talk about what that G means. Right. Take Delta's revenue of about $60 billion. What that G tells you is that every year for the rest of time, it's going to go down by 11% a year, which means next year it's going to be 54, and then 48, and then 42, and then 36. I'm not even rounding with the compounding, and then 30. So you're basically telling me that Delta is going to be half the size it is in 5 years and probably within 10 years out of business. Right? I don't think that's realistic. Okay. And that's the point. Like when you're talking about G's here, this is perpetuity. Right. And I know you're like, well, the math works, but that's not what you're doing here. Like you're not plug and chuggers. That's bad finance students. And you're not bad finance students. You got to use your brain. And when you see numbers that, yes, it solves the equation, but it doesn't make logical sense, that should be red alert, right? That something's wrong here. And 11% is an unreasonably negative G. Now, if it was negative 1%, okay, I can see going from 66 to 66.5 or 65 to 64, whatever. Like they've peaked and maybe they're going down, or you are AbbVie and you had Humira on patent and you've lost the big drug, you don't have something to replace it. So maybe it's going to be worse in the future than it is today. Or Pfizer, same thing. Well, their COVID drugs, which spiked, and people don't believe in COVID anymore, even though it's killing just as many people as it did 2 years ago. But that's okay. But long story short, not taking the drugs, Pfizer's not going to have the sales they did a couple years ago. The spike, okay, maybe a couple of negative points of G, but you don't see 11, negative 11, negative 20. Those G's suggest going out of business. I'm not saying that some companies can't go away, but I don't think that's Delta Airlines. So this is not a correct answer. All right, somebody said you've been talking and I can't hear you. Try turning up my volume again. Somebody talk again. Do you have a question?
Hello, can you hear us?
I can now, barely, but go ahead.
Oh, no, I didn't have a question. We were just responding to you earlier.
Oh, no, thank you for that. But can you see the screen then? You can see the screen? Great.
Yeah.
Right, but so the context wise, does that make sense to everybody? The comments I'm making here about this G? And you got to be careful. It's kind of like IRR. Like when you solve for an IRR, you realize that sometimes there can be more than one IRR that gets you an NPV 0. And every now and then you end up with the wrong IRR. And so just because Excel tells you it's the IRR, you still have to look at that number and say, does that make any sense? Because maybe that's not the right IRR, because the IRR is trying to solve for every intercept where the line crosses for 0. And if it crosses more than once, there's more than one solution. And so sometimes it'll pick the wrong solution. So back to this, same thing. You're going to get a G sometimes that doesn't make any sense, right? So why does it make any sense? What's the problem with Delta, right? And this actually bleeds into the next section of the class, but it should be intuitive by now, but let's just be very specific about this. This valuation, this share price that we are trying to match here, model price, it's coming from this screen. And specifically, it's coming from the operating value. That's the most important value for any company. It's the operating plus the non-operating value. The operating value is 55 billion. The non-operating value is pretty trivial. to get the overall share price. This is the value, right? Each one of the individual years, it's some, but it's not substantial. For most companies, most of the value is in the continuing value. Okay, I want to remind you of that. So getting the continuing value right for valuation, where it's going to be 70 to 90% of most companies' values. It's not the first 5 years, right? This is really critical, right? And that formula is based on the key value drivers. That's the G we're talking about. That's the G that I'm telling you, if you put in negative 11%, doesn't make sense. So right now we got a negative 11% G and we get an ROIC of, what is it? 10.9%. So you got an 11% ROIC and a negative 11% G. That's basically what's being put into that formula to solve for that value. And so here's where sort of like common sense has to apply. This is why like finance is a little bit of storytelling. That's why I make you write context. So you're telling the story of your as is. And you're saying, I think Delta is going to shrink 10% a year and they're going to still make a 10% ROIC. Well, when you say that out loud, it sounds stupid. I'm sorry. Like you should hear yourself say that out loud. Say it out loud. Because then you're like, why am I saying this? This doesn't make any sense. How could a company that's performing that well go out of business in a market that's not going away? So something is amiss here. It should be obvious to us that that's not the key value drivers. So I've said this before, I'm going to say it again, that 80% of the time, approximately, the process we've done in the class works. That because the ROIC is easier to forecast than the G, so we kind of forecast the EBITDA, which forecasts the ROIC because we have the balance sheet in there, and then we solve for the G. But every now and then, this is the every now and then, it doesn't work. DuPont, I'm talking to you, who's been sending me emails all weekend saying my model doesn't make any sense. You're in the same boat. So, G. Here's the problem. When you're in that circumstance and you're dealing with this formula, sometimes you got to go the other way. It is easier to estimate a G and solve for the ROIC. And that is the key here for Delta. So let's go back. So I'm trying to get to the $40 share price. And I know this doesn't work. So this is where the kind of the macroeconomics comes in. How fast do I think Delta is going to grow long term, right? And I think airlines are probably going to grow. They tend to grow with the economy, boom and bust cycles. That's why right now you're seeing people have been selling airline stocks because we're clearly much higher probability of recession. Matter of fact, what's Bloomberg pegging it at today? ECFC, the average probability of recession as of right now is 30%. But some of the banks, including Goldman, are at 50, right? And I'm just saying, with the stupid Trump tariffs, every headline I read is getting worse, and the new ones I'm reading are about real estate. People are having trouble selling their homes. People are backing out of contracts. Housing prices are starting to fall because mortgage rates are skyrocketing, and people are worried that they don't want to buy at the peak of prices for housing. So the housing market is starting to come under threat, right? And that's going to be the next series of headlines you're probably going to hear in the next 2 to 3 weeks. So all the economic data is getting bad, right? Interest rates are up, long-term interest rates are up, yields on the 10-year treasury, which is driving cost of capitals, are now 4.5%. Okay, inflation is expected to rise short term. I mean, you can't throw tariffs of 20% plus and not have price inflation, right? And we're already starting to see that with cars, et cetera. Matter of fact, I noticed that the value of, I have 2 cars, and one of my cars, the used car, has gone up in value recently because the used car market is starting to do well because people don't want to buy new cars at expensive prices. And that's before the 25% tariffs. So that's going down. GDP is going to be hit, especially government spending, as we know that. So one of the components of GDP, and if we slash government spending, well, that's going to hurt GDP too. Like everything suggests probability of recession is going to be worse, which means people aren't traveling. And oh, by the way, you think people in Canada and Europe and Asia want to come to the US right now? We don't have a welcome sign to this country, right? We're like stay out of here, stay away. We don't like you. And that's not a good message for the airlines. So long story short, short term, bad, forecasting that here. Longer term, maybe returns to normal after 2029, but damage has been done. So best case scenario, going to grow with the market. So I'm going to leave the G of 2% in here as what I think the real long term is going to be. I'll grow with the economy, more return to normalcy over time. Well, that's a share price of 55, still got to get the 40. So how do I get the 40? Well, that's the point. This is the other driver of ROIC. And this is why I left it in yellow when we first built this model. Because I said, we're going to use the year 6, wherever it is, that ROIC, and say that is representative perpetuity. But that's arbitrary. And if year 6 is not representative perpetuity, that ROIC in year 6, which is this one, 10.9, then that's not going to work out for the share price. So the market at today's price is clearly not saying 10.9% is what they think the airlines are going to make long term. That's not a $40 share price. That's a $50 share price. Which is, by the way, before Trump attacked everything, which is where they probably were going to be more reasonable. So here's the point. Let's go the other way. Tools, goal seek, set sell, share price, to value. I'll do this manually. What was it? 4024. By changing the ROIC, 6. And I don't know why I keep having goal seek problems the other way, but long story short, it's going to be around 5.5%. And so at about a 5.5% ROIC, my goal seek's not working right now. That's the $40 share price. So what I'm telling you is that what the market's done in the last week and a half with Delta in particular and airlines in general is they're just selling, right? They're just selling the news. They're taking the doom and gloom forecast and they're putting it out there long term. And what they've created is a share price that says, at this price, Delta with any growth is not going to be able to make a good return long term. Because, for example, Airbus, which is one of their biggest manufacturers, just had giant tariffs slapped on it, which means the price of every plane they buy just went up. So they got higher cost planes, lower demand. Yeah, they're going to lower fuel costs, but that's a short-term thing, not a long-term thing. And so long story short, which scenario sounds more reasonable to you? 2% growth with a negative spread or 10% ROIC with negative or negative 11% growth per year into perpetuity with an 11% ROIC. And I'm telling you, this one, though not a great scenario, probably is more explanatory of what's going on. Something in this range. Doesn't have to be exactly 2%. Like you could say 1, you could say 1.5, but the point is the market is pricing Delta today with a negative spread. It's not pricing it with a positive spread. And it's not whether I agree with it or disagree with it. You get to that when you get to your bull bear or your target. It is what it is because their share price is trading at $40 a share. And we got to explain why on a DCF basis are they trading at $40 a share, where we're taking the academic formulas and trying to make sense out of it in the real world. And that's basically what's saying. So if you think that we're returning to normalcy, your bull, your bear, and your target are probably going to lead to a long-term buy, which is why if you look at most of the analysts today for Delta, they like Delta at these prices because they think that they're oversold. That doesn't mean in the short term that they're not going to stay this way for a while with all the crazy uncertainty where it's like spin the wheel and what the tariffs are going to be tomorrow. But long story short, long term, taking out all the nonsense and Trump will be gone one day, Delta's a buy. They're on sale. But your timeline is going to be longer because they're doing the same DCS we are. And they're like, these numbers don't make any sense. Questions? So somewhere here would have been a more reasonable answer. Okay, so goal seek. Oh, somebody told me I made a mistake on my goal seek. So thank you for helping me correct my goal seek error. But again, you don't always have the goal seek. You start plugging in some numbers, just do it more manually. But the point is, whether you use goal seek or whether you use numbers, you're going to come up with a negative spread. That's the only way the as is truly makes sense. And we try to give some hints. I told the TAs to give you some hints as well about this last week to see if you could self-discover this. But regardless, I'm being much more explicit today. And there are some companies, DuPont, speaking directly to you, but probably others, that are going to be in this situation as well on Wednesday. And so before you do crazy acrobatics with the G, consider this other approach. But for some of you, you don't have to. And as I said, there's never an always answer in finance. There's always an it depends. But you got to be able to explain it, whatever your answer is. And it's got to sound logical. What about using to solve for EBITDA margin? Yes, potentially you can solve for the EBITDA margin as well to get there. That's another possibility. Because EBITDA is driving the ROIC. I'm doing it this way for two reasons. One, I know that this is the actual formula for key value drivers. And that's what's driving the long-term value. So rather than using the year 6 values to drive the long-term value, I'm directly affecting the long-term value. So it's a direct shortcut. And I think it's an easier one, but you can use EBITDA to essentially get there. But the other reason I'm doing it is because I do think implicitly, without doing it, that these ratios for the balance sheet are going to change long-term. And specifically, I'm talking about the net fixed assets. Like if the cost of the planes goes up, right? Tariffs, whatever, then that's actually going to make the returns lower, even if margins are better. So I don't think it's just an EBITDA margin story. I think it's actually going to be an ROIC story, right? Because that's why I mentioned the Airbus. Because again, Delta sources most of its planes not from Boeing, but from Airbus. And right now, Trump thinks Europe is evil. And he's not exempting Airbus from any of those tariffs. Matter of fact, he's doing all he can to help Boeing. I just gave him a big no-bid contract for the next generation fighter. So long story short, I'm doing this because it's not just about EBITDA. But if you had done EBITDA, that's at least directionally correct, much more so than just leaving a big, gigantic negative. And again, I'm not saying any one way is right, but it should be logical. And that's just one of the things I'm trying to drill into you in this class. And this will make you better in the real world than most finance people. Is most finance people think it's about solving the equation. That's the start. Anybody at any good business school can solve the equation. That's not why you're good, right? You're good because you know what to put in the equation. You're good because you can explain the equation, and you're good because you understand the context of the equation. That's what differentiates good and bad in finance, right? I don't want you guys to be good. Questions? Other questions? And then you can do your bull, your bear, and your target. All right. By the way, my bear, if I were to do it, would probably be not too different than the scenario that you see right now. Like it might be a share price in the mid to low 30s, but I don't think it's going to get too much worse for Delta than it is right now in terms of that share price. My bull's much higher. And you can kind of see it even on Wall Street. My bulls, there's much more upside to Delta than I think downside at this price. No one's saying it's going to go lower and get out, right? Even on Wall Street, right? This is, they've already thrown the baby with the bathwater out, and they're realizing it's probably a little oversold. But it's the volatility that's driving all this, and the fear factor, because we're at the whim of somebody who can't make up their mind and has no plan. And so basically, that's the real short-term problem. Like when we return to normalcy eventually, it's easier to do it, but just that uncertainty, it's hard to peg a bottom because God knows what he's going to do tomorrow. And so that's the real problem that we're seeing here in the short term. The long term, if you can ride it out, things are unstable. Matter of fact, just go back and look at history. You know, when we have 20% downturns in the market, most of them recover within 9 months, and you tend to do really, really well. This one, got to live with this guy another 3.5 years. And when or if he returns to sanity in that period of time is a big question mark. Again, questions, comments, concerns, crippling fears. I'll give you another way to think about the same thing, which is kind of like leading into our next section, which is on multiples. So here is in Elms, in the files folder, the very beginning of the semester, we had a folder called key value drivers. We did a little bit of an exercise. I want to bring up that spreadsheet real quick. So we download that file. And if you're playing along, I would recommend you do the exact same thing. So this was the key value driver file that we did beginning of class. Talk about the 4 scenarios. So got to make it a little bit bigger. All right. Except I'm going to take company A, and we're just going to call this whatever company, doesn't matter. And here's my question. I want you to tell me how we get to a PE of 6.7. And we're going to put the WACC at 8.4. And we're going to put the ROIC at 10.9. And we're going to put the growth at 2%. And we're going to put profit at I'm not going to worry about the profit, but it could be, you know, where is it? EBIT after tax, 6 billion, 24%, 24%, take out $1.5 billion, about 4.5 billion. But the point is that this number doesn't matter. The question is, how do you get to 6.7? So you tell me. I want to make that number 6.7. And right now, the key value driver formula, blow it up even more. I want this number to be 6.7. And right now it's a 6.7. How do I get it to 6.7? Changing these 3 numbers. Specifically, we leave WACC alone, changing those 2 numbers. How do you get there? Somebody give me a scenario. What would you put in? Got someone in the chat here. Try reducing the long-term growth. Okay. So what? 0? Not enough. -2. -4. -6. -20. Does everybody see the problem? Because you know what this formula is? That formula, that cell, same concept. We're just using PEs versus DCF. But that's the whole idea, is you can't get there. The only way you're going to get to a PE that low is you're not going to take a high spread and have negative growth. It's not going to work logically or mathematically. So how do you get there? Well, let's go back to the key value drivers. Eight, 7, 6. Just being directionally correct in the numbers here. So I'm using ROIC here, but this is actually whatever. The point is, notice that the spread's now negative. So growing a negative spread is more likely to get you there than shrinking a positive spread dramatically. Shrinking with a positive spread. And I'm just saying, when you try to explain those two scenarios, this one's easier to explain. It's not saying it's a good scenario. I'm not saying I think it's a good long-term scenario, but at least it makes more logical sense when I'm trying to explain the DCF. That's what's going on in the model. All right. And that leads to the next section of the class. But in a sense, we don't need to do the next section of the class to intuitively understand what's going on here. And so this is another way, even if you're thinking between now and Wednesday, to think about your own company, because what myself and the TAs are going to be listening for in your PowerPoint presentations isn't just that you solve the math and the real world context for why you made the assumptions, but are you telling a story that makes sense? Because if you're telling an inconsistent story that doesn't make sense, you can't get credit for that, even if you make the math work, because that's not a right answer. Right? So again, just context for all of this. So when you're doing your practice, practice that. Practice listening to your teammates and saying, have a red team. Does this make sense? Right? So change the ROIC to 6, exactly. Growth of 0, ROIC of 8, but you're still at a negative spread with no growth. 1%, 2.5%. By the way, all of these permutations that people are putting in the chat are potentially explainable. And that's the whole point. Like, when we're dealing with the future, we're dealing with a range of potential outcomes that lead to the same answer, because multiple outcomes can get there. And so as long as you're explained, like, why am I somewhere in that range, that makes sense. But negative 11% G, back to the model, mixing metaphors, it's probably not in the range of reasonable outcomes. Now we're talking about perpetuity. And so that one, even if it mathematically solves it, it is probably unlikely to be a real world answer. And we should be able to start to distinguish that. Hence the real world application. Questions, comments, concerns, crippling fears? All right. So, schedule change. Because I already know the emails are coming. Got a bunch of emails last weekend about Passover. Easter's this coming weekend. I know get a lot of emails about Easter too. So I have made a change. The change to the schedule is that Wednesday, you are going to work on your presentation, deliver your presentation. So I'm going to give you the balance of time today to be in the lab, get your data, reassess, work with your teams, get the presentations in good shape for Wednesday. Okay. So in terms of assignments, next assignment is homework 12. Okay. I've changed it to be due, instead of next Monday, next Wednesday. Okay. Wednesday, the 23rd at 10 a.m. Okay. And then homework 13 will still be due the following Monday, 2 weeks from today. And that is what I'm calling an extra credit assignment. Let me be specific about that extra credit assignment. It's still an assignment you have to complete, but with that assignment, we're above 100 points in the class. So that 2 points assignment, I think it's a 2-point assignment, is, did I put the points in for this assignment yet? I think it's going to be a 2-point assignment. But that 2-point assignment is essentially going to be an extra credit assignment. Okay, so I'll just return back to the grading. So I mentioned at the beginning of the semester, it's where ELMS is going to start to confuse you a little bit about your grade, because we started the class with 100 total points. Okay, and as I add extra credit, which I added 1 point over the last 2 weeks to all 4 sections, there's now 101 points in this class. And with that homework 13, there'll be 103 points in this class, right? So to get an A in this class, you will need 93 out of 103. Now, ELMS does not understand that. And what ELMS is going to do for your grade is going to take 93 divided by 103 as a percentage, and it's going to give you a grade that's not an A. But that's not how I grade. Right? I track all the grades in ELMS. What we're going to do at the end of the semester is I'm going to download the grade book into Excel, and I'm going to add up your total points, regardless of how many are available. 93 total points, regardless of how many available, is an A. 90 total points, regardless of how many are available, is an A minus. At this point, we're on track for 103. I might do one other extra credit, 104, but you're running out of extra credit opportunities. So don't miss that assignment, right? And essentially, that's the curve. So if you didn't do well on something, do these extra credits. Make sure you do homework 13, because if you don't, you're also going to take the final exam. But then there'll probably be another assignment. We'll call it an extra credit assignment, homework 14. That'll be optional, but that'll be the final extra credit of the semester. And I won't know when it is or how much it is until I kind of see how the grade book is shaping up, right? But typically, I end up with 104 or 105 points. Right now, we're at 103 with that assignment, right? So there'll be probably 4 to 5 total points of extra credit. And again, it's not that you're applying to any one thing. It's just, it goes towards any assignment, just gets added up cumulatively to be your grade. Yes, there was a 1 point extra credit. I have been behind. I was in the hospital for 4 days last week. My apologies. Questions about grading or anything else? The rubric for the TA's grading or the presentation is in, I'm going to re-upload it because I made a typo, but it's in, oh, no. Let's get out of here. Files. The rubric that they're going to use for Wednesday is in the files folder with a typo. I'll fix it right into this class. Here, that's the rubric the TAs have been given to grade you in class with the points and the distributions. So homework 12, thank you for asking, is not due on Monday. It's now due next Wednesday. Homework 13 is extra credit, but it's a required one to opt out of the final exam. So you do have to do homework 13. I'm calling it extra credit because we've now busted through the 100-point barrier. So that's still due on Monday, the 25th, I believe it is. Excuse me. Those next 2 assignments are the 4th section of the class on multiples. Okay. So what's going to happen is, I know that we've had a couple of religious holidays and people go home to families, whatever. But the point is, Monday will be a lecture day. All right. I'm going to record a Zoom lecture, even if I'm alone in a room doing it, week from today. Okay. You must watch that lecture to do Wednesday's assignment. Okay. So if I have time later this week, and unfortunately I'm still dealing with some medical stuff, I might try it and record that lecture before Monday, but no later than a live Zoom on Monday. Basically, it's going to explain how to do multiple analysis, and next Wednesday, you'll do your first assignment on multiple analysis. For that Wednesday assignment, I'm going to give you the screenshots for homework 12, because I know a lot of people are going to be out of town. You won't be able to access the Bloomberg terminals in the lab. So I'll give you the required screenshots for homework 12. For homework 13, you got to get them yourself out of the Bloomberg lab. Okay. And how to do it will be a video that you'll watch or live session on Monday. So just a couple of logistics to try and make it easier on everybody so you know what's coming. And then we're in the home stretch, because after we do those 2 assignments, then 4th group project, and essentially the first week of May, 4th group projects, And then is final presentations May 5th or something like that, whatever that Wednesday is. And then by that Friday, all the grades are in, and then that following Monday, final exam for those that need to take. So we are less than a month out from ending the class. So kind of a lot of rapid things happening here at the end. Again, questions, comments about anything? All right, I'm going to post this video pretty shortly. Otherwise, still feel free to reach out to the TAs if you have any additional questions. And good luck on your presentations on Wednesday. Look forward to hearing a lot about the companies that you're doing and the industries that we're going to be presenting on. All right, see you guys on Wednesday. Have a good day.
Thank you.
Thank you.
Thank you.